today's webinar with Stratton Markets. Now, today's webinar, ladies and gentlemen, is going to be based on price action plan. Now, some of you may or may have not have heard of this specific technique. Do not worry, this is the reason for today's webinar. Now, price action plan is actually one of the most popular part of technical analysis. Most strategies that exist out there are based partly on price action plan, especially if you're using expert advisors as well. Their strategy is most likely going to be based on price action plan. Now, in today's webinar, we're going to be looking at exactly what price action plan involves, and we're going to be looking at many different scenarios and how you can be looking and using price action on your charts. Okay, now all the charts that I've chosen for today's webinar have been taken from today's MT4. Okay, so I'm not using charts from a year ago, 2 years ago, because it was a once in a lifetime situation. All charts were taken from today. Now, I can see quite a few names which I haven't seen before. So as always, I'm just going to do a very quick introduction to myself. I am the market analyst here at Stratton. I initially started as a financial advisor in the UK in London. I have helped set up academies around the globe. Also, I've done quite a few seminars. I've been trading for approximately 7 years. And I do a webinar every Tuesday at this time. And of course, each week is based on something different. If there is anything that you have with regards to recommendations, something you may be finding slightly difficult that you would like me to do a future webinar on, feel free to send me an email. I will display my email at the end of the webinar, and you can get in touch with me at any time. Now, just a very quick introduction to Stratton Markets as well. If you're new traders to Stratton, the main thing I want to point out is that Stratton is a fully regulated broker by SISEC, which is a European regulator. We have our own trading platform and MT4, weekly webinars, and the head office is based in Cyprus. As everyone knows, here at Stratton, we are looking at investments. Investments, of course, carry a risk with them. I definitely recommend that you read the risk warning. And if you're not 100% sure what is involved in the risk with regards to your investment or your trade, then it is best to seek financial advice and to ensure that you are fully aware. Now, very quickly, I just want to go through exactly what technical analysis is. Price action is based on technical analysis. So there's two types of analysis in the market which traders are using. One is fundamental analysis, where you're looking at news and events and using that piece of information to predetermine how the market is likely going to be moving next. Technical analysis is, as you can see from the screen, when traders are analyzing the price movement of the charts. So the philosophy behind technical analysis is you're looking at historical price movements, you're trying to see a pattern in the movement, and you're using that pattern in order to again predetermine how the market is going to move next. Okay, now price action is massively linked to technical analysis, or should I say technical analysis is massively linked to price action. Now, before we actually start looking at the chart, I want to show you a little bit about what I mean by price action. Now, price action is the movement of a security over a specific period of time. Obviously, the price action is in relation to how the price is forming on the charts and the movement of the price. Okay, now price action, you're not really specifically looking at indicators. The idea of price action is blindly looking at the charts, okay? You're using support and resistance points. You're using price patterns in order to determine how to trade going forward with regards to looking at buying opportunities and looking at when you should be also coming out of the trade, which is equally as important. Now, price action generally refers to up and down movements of the security. So we're going to be looking massively at ranging. We're going to be looking at how you can apply different kinds of strategies in terms of price action to different types of charts, okay, and time frames. Now, some of this may not, you may not understand at this moment, but when I actually get you onto the charts, it will make a lot of sense. Now, I want to talk to you a little bit with regards to limitations. I want to ensure that everyone is never at any point relying on a single strategy or single indicator or single piece of news with regards to their trading. The more information and the more indications you have with regards to the market, and the more you feel confident with regards to the traders when you should be trading. You want to be what I call mitigating the risk, okay, of the information you're receiving. Okay, so if you're getting one single indication, okay, it is not such a strong indication to be buying where you have where there's a situation that your fundamental analysis is showing you to buy, you have multiple indicators showing you to buy, and also your price action analysis is also indicating to you to buy. Okay, so this is what I mean by limitations to price action. It's a very, very popular way of analyzing the market, okay, but it does have its limitations, which is why you need to look at this webinar along as other webinars where we looked at fundamental analysis and technical analysis and different strategies and look to merge them, okay, in order to, again, mitigate the risk. Now, what do I exactly mean by that? If you look at the charts here, for example, now a lot of people look at this single chart. We're looking at, I believe, a 4-hour chart. Now, this, if you're looking at this chart, it looks like the price at the moment is very high, likely to find a lot of resistance and start to maybe make its way downwards, okay? However, if you look at a different chart, if you look at a daily chart like we can on the right, it is given a whole different story, okay? Now, it's very important that you understand and you're looking and analyzing all the different charts in order for you to get the whole story of the price movements. Now, I want to actually start looking at today's graphs and what is involved in price action. Again, price action, as I said, is looking at the charts and it's looking at different types of patterns and how you can be trading them. Now, the first pattern I want to look at is something called the bullish breakouts, okay? You will never ever see a chart where it is continuously ranging, which is what a lot of people are looking for, and there's not a specific right or wrong. However, it's very rarely you will always see a chart where it's continuously non-stop staying within continuous highs and continuous lows. What is most likely to happen is it will happen for a short period of time and then break what we call a breakout. Now, it could break out bullish, like so, or it could break out bearish. So it could do something like this before it starts ranging again. Okay, this is what tends to happen on the charts. Okay, now if we look at this chart, we're looking at a bullish breakout. Okay, so we can see here it is ranging at this point here. So we can see it's continuously staying between continuous highs and continuous lows. If you looked at the chart previously, it doesn't cover that far, but it was in a range like so. And then what you're looking for is the breakout, okay? So we can see the breakout happened here. Now, when there is a breakout, then you can start looking at the opportunity in terms of possibly entering the trade, trading long. Now, what I mean by trading long is the fact that you're trading, you're trading for the security to be increasing in value. So in this instance, it is the British pound. So we've got the breakout here. We can see it's quite a strong breakout. We didn't get a kickback until here. So we can see it is a very, very strong break in the range. So we can see, because it's a very strong break, it's likely going to continue upwards. Now, when you get a very strong break, if it kind of hindled here before coming back down, it's not so strong, and you wouldn't be looking for a buy situation. You'll be looking at it continuing to range. Okay. In this instance, it didn't do so. We saw a very strong break. So we're looking at a bullish break, and we're looking at a point to enter the market with a buy. So we've got our first retracement here, okay? And we can see where it found the resistance. So at this point here is where we can put this red trend line, which I've placed on the screen, okay? So this is an indication of where we're finding the resistance. So once it hit the retracement here, okay, then we're looking at the next situation where it hits. So next situation where it hits is here, or if you're looking for a stronger hit, you're also looking at here. Now, another thing I want to indicate to you is you also have a strong rejection. You can point out strong rejections with candlesticks as well, where you can see a candlestick having a very large shadow underneath it, like so. Okay, it means that it's had a very strong rejection. The market has rejected that movement very quick. Okay, so when it's rejected the movement very quick, it could be an indication that it's going to continue to rise. Okay. Alternatively, you can get a rejection downwards, so it could look something like this, okay, which is a rejection of the price going up, and then it could be moving downwards, okay? Now, again, that is just an indication and something to think about where you're looking at the price action, okay? So we saw the breakout, okay? We saw the breakout here. Then we're looking for the trend and where it's finding, then we're looking at how strong the trend is. We can see the trend is very strong, okay? So we're looking at buys, okay? Then we're looking at where it's likely to find the support. We see it found the support here at this point. And then you're looking for that next support point to enter. So you could be entering here, and you could be entering here, okay? Now, this is if you're trading the trend, okay? You do have an option to trade what we call the retracement. So this is a retracement here, this is a retracement, and this is a retracement here. You do have an option also to trade the retracement. The only difference in that instance is instead of drawing the support line here, okay, you would draw it on the upper side like so, okay? Now, you can use this strategy, you know, price action plan alongside indicators and alongside fundamental analysis, definitely, of course. So we've got the breakouts as we sit here, we've got our indicators, we're looking at buys, so everything is showing a direction of a buy. Then we look at the fundamental analysis. So here we're looking at the pound. We saw a lot of good news coming out with regards to the pound. We saw news with regards to that there's likely to be a deal, which we know now there was a deal with the European Union. So you've also got fundamental analysis giving us an indication the pound is likely to be growing in the future. So whether you entered here, here, or here, depending, of course, how long you're keeping hold of the trade, and also your margin and as well the volatility, you could have been entering any point, exiting, sorry, any point above here, okay, which is of course down to you when you're entering and exiting. So this is a bullish breakout. Then we can look at a bearish breakout. So again, we're looking at a similar scenario, but instead of a buy, we're looking at a sell. Now, this is a Euro USD chart. The previous was the pound. We're looking at different charts throughout the whole of the webinar. This is a 4-hour. So hopefully everyone can spot the range. So more or less continuous highs and continuous lows at about the same point. Now, you shouldn't be looking for a straight line because you will never ever find a straight line. What you should be looking for is that it should be in and around this area. So it doesn't necessarily have to be touching this line. It just needs to be getting close. It could be getting close. It could be just be passing it a little bit. Okay. Now, I've chosen this graph specifically to point out to you the rejections, okay? So we'll be looking at false breaks in the range. So we saw a false break here, okay? So we're looking at this chart, okay? We see that it's broken, so we know there might be an indication for a buy, okay? Now, when you're looking at this, the first thing you need to look at is here you can see big shadows, okay, above the candlestick. So you can see there is a rejection, a slight rejection here of that price continuing to go up. Now, it did go up, okay? We need to bear in mind that rejection here though, and then we start to see it fades out very quickly. So you would not be entering there. Then we're looking at this break here. Again, we can see the shadows under the candlesticks. This one here, if you can see it, hopefully you can see clearly on your screen, is a massive rejection. So we can see the candlestick with a massive shadow underneath it like that. So again, we're weary because it's breaking that, towards a bearish trend. We've seen the rejection in the price, and then we can see it's losing momentum, okay? It tries again a second time, okay? If it tries again a second time, it's indicating that it's really trying to break that barrier, really trying to break that support point. So that second time, you need to pay a little bit more attention to it because there might be more of a chance of it being a stronger trend. Here we can see there is no resistance it passing that barrier. So we're looking at a very strong break, okay, a bearish breakout. So you'll be looking at a similar situation to the previous screen. We know we're looking for sell trades, okay? In which case, looking again at the fundamentals, looking at your indicators, and also the fact that you have and you're looking at sell trades because it's a bearish breakout, you'll be looking to enter the trade for the sell, okay? At which point you can enter, of course, at any point you're looking to enter. It's down to you, okay? But you're looking at sell situations. Now we're looking at, I just want to point out a little bit the breakout test, okay? We looked at in the previous screen. So we're looking at a false breakout in a sense, and we can clearly see it here, okay? So I just wanted to give you a bit of an understanding. This is a bit of a close-up on the charts, okay? We're looking at a different chart this time. It's 15 minutes Australian dollar against the US dollar. We've got the breakout. We can see it's getting a lot of rejection on that candlestick. We can see it's getting quite a lot of rejection on that candlestick. Of course, the further it's going down, the more the rejection is, okay? And then after that, we can see the next candlestick is a very strong bullish candlestick. So we're looking at we're looking at a situation where it's a false breakout. And we can see it here as well. We can see the rejection of the price here. it stops going down here, and then we get that very, very strong bullish candlestick. So I've completely stopped looking for sell trades and have decided it's a false breakout. It does slightly go down, but it is very quickly rejected again here before making its way up. Now I want to speak about a little bit about ranging. Now people tend to put one continuous high and one continuous low. Now what I wanted to illustrate to people, in this case I am looking at crude oil. I'm looking at it over a 1 hour chart. Okay, you can have a range, you can be ranging between 3 or 4 or 5 plots in the chart. Of course, you don't want to be putting too many ranges because that will make it become a bit too difficult with regards to the price action and how you're looking at the chart. Okay, so you can see on this indication we've got I'm putting it between 3 ranges because those are the ranges it is bouncing off and on. Okay. Now again, I really want to point out the importance of looking at the candlestick. We can see there a very strong rejection and see how we could have traded it upwards. You can see a very strong rejection here, could have traded it downwards. It's not always the case, okay, but again, it's an indication. We've got a rejection there, okay, and it's a small breakout, so we know it's a false breakout. Start looking at buys. False breakouts again, we can see the rejection in the candlestick, reaching the point of support, hasn't even managed to break it. And we're looking at the rejection of the price, so looking at the buy, okay, you can see something similar here. It's rejected the price coming out of this range here, okay. So this is how you need to be looking at the chart with regards to price action. Of course, as I said to you before, you need to be looking at this alongside indicators and alongside fundamental analysis. So look at it blindly, okay? So look at it in terms of price action and price action movement. Find the breakouts, find the candlesticks where it's showing an indication of a buy and a sell or rejection in the breakouts, okay? When you think there's an opportunity to buy or sell, then you look next at your indicators. You look at your RSI, you look at the moving averages. If there's a crossover, if there's been a crossover lately, you look at the Ichimoku indicator. Is it above support clouds? Is it below support clouds? Okay, so then you've got one indication with the price action. Let's say you've got another indication to buy with your indicators. Next, you look at fundamental analysis, okay? Is it something that you believe is going to continue or likely not to continue? Okay, so I just want to point out on this chart again, with regards to ranging, you can be ranging between more than 2 points in the market. Also, part of price action is knowing about price correction. Now, when you're looking at price correction, you should be looking at a strong trend, whether it's bullish or bearish, okay, and be waiting for either a retracement or a price correction, okay. Now, a great tool when you're looking for that retracement and price correction is an RSI. A lot of people that I speak to use RSI, and also a moving average. This is a 30-day moving average. I'm looking at the euro against the New Zealand dollar on a 1 hour chart this time. Now this, we can see a very clear upward trend because we're seeing higher highs, okay? We don't really see a big rejection of this price, but we do see it starting to go down, okay? Once we see it start to go down, we need to look at the chances of either this being the retracement, in which case it will do something like this, or it being the price correction. You can use the 30-day moving average to look at the crossover point. If it's given a crossover, okay, and it's a strong cross, so it crosses it very easily, then you can start looking at price correction scenario, okay? Again, you need to be looking at this along with fundamental analysis, okay? So we're looking at the crossover here, okay? So I'm thinking, is this the retracement or is it the price correction? If it's the price correction, then I've got this much in the market to make, okay? Now, is it a price correction? It looks like it's crossing the RSI. It found some resistance here, but then it crossed it very, very strongly here. Okay, so I'm thinking, yes, it's most likely going to be a price correction. I could enter there. I could wait a little bit more. It got a big rejection of the price here. So if I waited, at this point, I'm not too sure whether I'm going to enter. Then we've got, okay, the big rejections here, and then I get a strong candlestick showing bearish, at which point this is the second indication to be entering. So if you didn't enter at the first point, then you could be entering at this point, okay, in the market. You could use the RSI as the point of when you should be entering as well. So it's crossed, okay, you're waiting for it to hit the RSI again as a point of resistance, okay, so when you should be entering. So you could have entered it there, okay. If that wasn't strong enough for you, you could have entered it at this point here and made that, or at this point here possibly as well. Moving on. Now, a lot of people simply don't look at the weekly charts and also the monthly charts. You're in a very, it can be very useful to look at weekly and monthly charts as well as the smaller charts. Now, I'm not telling people not to look at those charts, but I would definitely recommend looking at all the charts, including the weekly and the monthly. Here, we're looking at the New Zealand dollar. Okay, so we can see here almost going back 4 years now. Okay, now what people can see is that there's been a massive bearish trend. Now we are in the point, I mean, it's gone a little bit up now. Okay, you can't see it on the chart, but it's gone a tiny bit up. But here we're at the point that it's never been this low over the past 4 or 5 years. Okay. So we're in the point of it being extremely oversold, okay? Now there's a strategy which a lot of people use, is called buy the dip, okay? Now this is a situation where you can be buying the dip, okay? Now you need to be careful not to be bottom fishing, okay? So even when you're looking at a situation like this and thinking, I'm at this point in the market, I'm looking to buy the dip because I believe nothing is going to always continue to go down. It needs to come back up at some point. That kind of a mentality, of course, you should still be using a stop loss. Okay, but I want to show you how you can use price action, just simply looking at this chart blindly and seeing where there is an opportunity to buy and sell. We're looking at a weekly chart. We can see it's continuously low and believing that it's going to find a rejection, which we found there, okay? A rejection of the price and hopefully start to move upwards. Now again, it's a situation of buying the dip. Now, again, you need to be looking at the fundamentals alongside price action, alongside your indicators and alongside your strategies, okay? Now, you need to be, there's a lot of information you can be finding with regards to the economy, okay? So these are some headlines, some very simple recent examples. So you've got the Royal Bank of Australia drops interest rates again to even lower historical lows. okay? So when interest rates drop, normally it's indicating the value of the currency is going to drop. When it is increasing interest rates, it's likely to continue going up. So read this article, okay, and look at the indicators, look at the price action, look at the article and the fundamentals, and try and marry them up, okay, in order for you to have an indication of whether you should be buying or you should be selling, okay? You can look at interest rates, you can look at employment, okay, for example, on FP Friday as well. You can look at inflation. So what's the level of that the economy is growing? Is the economy growing or is it not growing? Okay. Also things like Brexit. Is there going to be a deal? Is there not going to be a deal? Again, you need to be looking at this alongside alongside the indicators, alongside the price action. Now, I want to be clear of exactly how you should be looking at these articles and what you should be asking yourself, okay? So, of course, you're looking at it, you're seeing an article, might be in terms of employment, it might be in terms of the currency, in terms of a company, politics, Brexit, interest rates, inflation, whatever it is. What you need to be asking yourself is, the piece of news is coming out, has the trend formed or is it yet to form? So why are we seeing this trend? Now, is there a reason that that is going to be a long-term trend, or is it likely to be forgotten very quick? Okay, so is it something like Brexit, where it's long-term, no one's going to forget it anytime quick, or is it going to be something like employment this month dipped a little bit, nothing major? Okay, so is it something that's going to be a long-term trade? Is it something you've got a lot of time to get into? Is it something that's going to be forgotten quickly? So there's likely going to be a massive retracement. There's likely going to be a massive price correction, which you've only got limited of time. Why has it happened? Has it happened before? Is it going to continue happening continuously? So, for example, is there a recession in the market? In which case, is the employment going to continue to go down? Is it something that's going to have a domino effect? How is it going to affect the supply and demand of the currency? Don't forget, the currencies are priced on supply and demand. The higher demand, the higher the currency price. The lower the demand, the lower the lower the price will drop. Is it likely to change? Okay, so there's a downward trend. You're asking, so why there's a downward trend? Okay, you know now what the downward trend is. Is it likely to change? So am I going to enter the trade for it to go down, and tomorrow something's going to change and my trade's in a loss? Or is it not likely going to change anytime soon? Again, retracement, price correction, is that likely to happen? And with regards to that currency or that stock or whatever it is you're trading, what is being released in the next 5 days? So if I'm trading today on a piece of news showing me that something's going to go down, is something going to be released tomorrow which could possibly start making it go up? And look at this general strength of the economy as well. Now, I wanted to give you an example of long-term and short-term, what I'm talking about. So we've got here around this time Brexit, okay? We're looking at a monthly chart. So we're looking at here many years, about 8 years, okay? And we can see Brexit, we know it's obviously something very long-term. So you've got a lot of time here in order to be entering the trade. There's a lot of time there. We're talking about years. Okay, started to go up a little bit under Theresa May before it started dropping again. Or is it something which is temporary? Okay, it's not such a strong piece of news. Okay, so we're looking at the pound against Japanese yen. You can see, yeah, we had a great upward trend, but it loses momentum very quickly and the price corrects. Okay, very quickly and quite strongly. So is it going to be number one or number two? Okay, this is something you need to be asking yourself. So this brings us to the end of today's webinar. Again, I want to thank everybody for watching today's webinar. I can see there's many people here watching. Now, again, just a quick review, price action, looking at the movement in the market, okay, looking at where it's finding rejections. We're looking at breakout points, we're looking at ranging in the market. So hopefully you've looked at these different scenarios that we've looked at today, and then you can apply them to your personal trading. Of course, if you've got any questions, feel free to get into contact with me. This is my email here. In the meantime, please trade safe, enjoy trading, but trade responsible. Thank you.